Something big is on the near-term horizon for AMC. And when I say big, it means short squeeze type of big, guys. There has been a lot that has been happening over the past couple of weeks. And if you have been a follower of this channel or you watch these videos, maybe you aren't subscribed, you have returned about 80% from the lows in which we were calling out this rally to a head. We couldn't have predicted this rally much better than what we did. And it looks like the next couple of weeks and next couple of months, we're going to continue to see a big rally. And it's pretty easy to see at this moment in time, guys. So we're going to talk about everything you need to know with AMC in this next upcoming rally. As well as that, we are going to be going over a price prediction for the end of this week and the key levels that I want to see AMC break out above, guys. So let's get into it. Hit that like button, subscribe to the channel if you have not already. I'm sure it will help you make some money in your trading and investing with AMC, as well as the broad market macro information that we like to go over here on this channel as well, guys. So first things first, with AMC stock, what happened last week was a little bit of a gamma squeeze, not in the same way as you would kind of expect to see with the Stonko tracker data, numbers looking super high. It wasn't like that, but it was a lot of under the surface option activity happening with hedge funds and market makers. So market makers, right? Think about it like this, and I'm trying to put this into the best context for everyone to understand. If market makers see retail investors buying options, right? And they could be close to the money, far out the money. Usually they're far out the money. When they see that, they don't give it as much credibility. They do still have to hedge their positions and whatnot, depending on, if they're close to the money options or not. But they don't give it that much light. But when hedge funds and money managers, they might know the market makers. They might know Ken Griffin himself, right? So there's a little bit of a discrepancy there. But when you see hedge funds, or I should say when market makers see hedge funds sweeping into these massive positions that are far out the money, that is a very bullish directional bet, and it's far out the money. And it basically makes the market makers say, hey, maybe we should hedge out some of this position now before it potentially could be too late. And all of this is done with algorithms on, risk to reward calculations and whatnot. Delta, theta, gamma, all of these different factors. There's so many factors that play into it. I literally can't sit here and tell you one factor, but I can tell you with 100% certainty that market makers, they react more to hedge fund positioning than to retail positioning. And what we seen last week was clear hedge fund positioning to the upside. Like we went over in, I believe it was the last video, essentially this article is talking all about hedge funds positioning on certain option expirations, like the $11 calls expiring June 16th, 2023. This was a big one, 200 days out, 50% out of the money. When you see options like that from hedge funds, I mean, they're usually not buying 50% out of the money calls with 200 days left to expiration. They're typically not doing that. So you did see a lot of hedging done by market makers in the past week, as well as, like I said, a lot of that, fueling that gamma activity that we were seeing from the hedge funds, guys. And what we seen on the chart last week was very, very good. And we've been waiting for this break really out of this range, in which we are out of this range. So when you look at AMC, we called the rally from the lows. The low was $5.05, called the rally, and essentially we wanted to see if it would break out above the 50-day moving average. It did, and we have held the 50-day moving average for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days, kind of in this range, right? If I go ahead and draw a line here, pretty easy to see. Let's go ahead and draw the line right here at the intraday wick of Thursday's candle, or even the top of this candle on November 14th, the first day we broke out above the 50-day moving average. You've been in this range, like under this, I'll call it in between about $8 and about 750. You've been in that range for a while now. And what you've seen on Thursday and Friday was a breakout and a real big move, relatively speaking, above the 100 and the 200-day moving averages. We couldn't hold those moving averages, but we came down and we retested the 100-day on Friday, and we're still, if you move this trend line down to where we're currently at, you are still well above where we have been at for a vast majority of the last 12 days above the 50-day moving average. So you're hitting higher lows and really holding these levels perfectly. If you look at AMC on Friday, even though there was a lot of pain and carnage in certain sectors of the markets, AMC, meme stocks, they were not in a great sector. They're just not. When there's fear in the stock market, investors tend to sell those stocks off. They tend to short those stocks. AMC was unchanged on the day, holding up at this higher end range. And I do think in this next upcoming week, we are going to test and break out above these moving averages. And we'll talk about that a little bit more later on into this video, but I do want to take a look at the actual option chain here and take a look at what we're dealing with over the next couple of days, guys. So for this Friday, that is going to be December 9th. What we're seeing as far as call activity, hold on just one second. We're seeing volume definitely very high, but open interest high as well. So at the 850 strike, you're seeing 5,500 for open interest, 5,300 for open interest at the $9 strike, almost 13,000 for open interest at the 950 strike. At the $10 strike, about 7,000 for open interest. And if you were to make it all the way up to 1250, you are sitting at about 10,000 for open interest. So it's looking very bullish as far as the option activity expiring this Friday, and that can and likely will help to push the stock up higher. I think a lot of what we've been seeing, though, is just based off of technicals and a lot of that hedging from market makers. I don't think this was a big shorts covering kind of rally. There was some shorts covered at some point during those explosive times, like when AMC was halted. There was some shorts that covered, but by and large, the short interest really has not moved. The estimated short interest of free float is sitting at 21.24%, pretty similar to GameStop short interest as well, which is pretty much the same thing, which is very interesting. Days to cover sitting at 6.81, cost to borrow of 37.48%, and 100% shared utilization. If we take a look at the live short interest and the cost to borrow numbers, cost to borrow average at 38.68%, cost to borrow max at 55%, and cost to borrow minimum at 6.5%, with about 107.28 million shares that are sold short. The live numbers that we're seeing as far as the cost to borrow numbers on Friday were about 32.5%, which is so much higher than what we are used to seeing. These numbers are 3 to 5 times higher even than what we're seeing on GameStop currently. And GameStop also has the potential, as you guys know, to move very big. So AMC is like the clear winner here. You just look at any other stock, you're not seeing these cost to borrow numbers. You're not seeing the short interest going up in the same way. You're not seeing days to cover so high, and you're definitely not seeing the technicals playing along in your favor so very well, guys. So there is that information. As you guys may or may not know, you do have GameStop earnings coming on Wednesday, and GameStop earnings will move things around quite a bit. If it's positive, it's probably going to be really positive for AMC. If it's negative, I still think it could be a neutral thing for AMC. I don't think if GameStop goes down a lot, AMC necessarily has to, even though that has been the correlation as of recently, guys. And that's basically it. We don't have a lot of economic data. I went over the economic data in the last video that we're going to have for this week. A lot of it is going to be on Thursday and then on Friday, as well as Costco earnings on Thursday. Those are really the 2 days I think things could get a little bit wild, and you could see bigger moves in the equity markets based off of those data points and based off of earnings on Thursday from Costco. But Monday, Tuesday, Wednesday, you're probably going to see a pretty docile week overall. People are trying to get ready for Fed Jerome Powell coming on December 14th and the next CPI report, which will come on December 13th. Nonetheless, let's take a look at the Stocko Tracker data numbers, just, because why not cover all the bases here in this video. And for this Friday, you're looking at about 13,500 calls that are currently in the money and about 43,000 calls that are out of the money. On the put side, about 5,000 puts that are in the money and about 45,000 puts that are out of the money. So not huge numbers, but take it for what it is. Last week, the numbers were not big as well, but you've still seen a lot of that hedging done by market makers, because who was buying the options? Hedge funds were buying the options. And after the news we've seen with Amazon, investing $1 billion into blockbuster movies for theatrical releases alone, and the kind of speculation and rumors about Netflix or Disney or Amazon just acquiring a stake in AMC or acquiring the whole business, it does lead me to believe something big is on the near-term horizon, and we need to pay attention to all of these rumors that come out, all of the data and how it moves, how hedge funds are positioning in their AMC positions. I think this will give you guys a little bit of a head start to any potential good news that we're going to get. If you watch this channel, I would bet you will have a heads up to anything that is coming. And why I say that is, even right now, you're having a heads up that the stock is likely to go through a major rally over the next couple of weeks. Now, for this week, what I want to see is the stock break out above the 100 and the 200-day moving averages. The 200-day moving average is at $9.12. The stock closed at $8.10 per share. So that's about $1.02 move to the upside. It's not a huge move. It would be pretty good for the week nonetheless. I think it's very doable, but I do think you'll find a lot of resistance around those levels. So I am going to put my price target, in between these levels. On the higher end range, you're talking about $10 per share. On the lower end range, I think you're still going to break out above the 100-day moving average at $8.62 per share, which would still be, let's go ahead and pull up the trend line here from where we're currently at about $8.10 per share up to the 100-day moving average, would still be a gain of about 8% on the week. Just to get to those levels. On the higher end range, I think you could be looking at, a over 20% gain for the week. And I think if you do break above the 200-day moving average, it might get quite explosive, especially how hedge funds are positioning. And that's something you guys will definitely want to pay very, very close attention to. And really, let's just get super bullish with you guys. Let's just say we do break out above the 200-day moving average. We do break out above this down trending level of resistance. That's going to be the next big level, probably going to be around 1050, 1050-ish. If you break out above that, you could go as high as $15 this week. What tends to happen is once you break out above the 50-day moving average, you tend to get a 100% rally. One of these rallies took a week to peak out and to get that 100%. The next rally took a month to peak out and get that 100%. But a lot of the action does tend to happen in 1 week. So I think if you can break out above the 100-day, this orange line, this teal line, the 200-day moving average, and this downtrending level of resistance line, this trend line you have right here, I think you definitely could make a 100% rally in this week. It's going to depend a lot on GameStop earnings, guys, but that is what I got for you. So hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching. Most importantly, enjoy the rest of your weekends, and I will see you in the next one.